Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are talking about a fantastic catalyst for SoFi Technologies SOFI stock, specifically how they are going to start implementing options trading on their brokerage platform, which is going to be fantastic. We're going to talk about how this can reflect very positively on their overall SOFI stock price, causing it to surge by about 80%, some analysts believe. We're going to be going over their future revenues and outlooks for their various EBI TDAs, their costs, and of course how this is going to reflect on investors, whether this is good or bad news. Then lastly, we're going to go over the latest stock price news after we go over the various implications for their balance sheet, their earnings reports, their future revenue predictions, what analysts think of the SoFi stock, and what we should do as investors investing into this company in the current market environment. So if any of this sounds interesting to you, remember to go and smash that like button right now, subscribe if you are new, comment your thoughts down below about SoFi Technologies, and without further ado, let's get right into today's stories. So SoFi Technologies, if you didn't know, is a fintech company, and they basically have an all-in-one inclusive app that gives anyone access to anything they would need that's financially related, such as various investing products on their brokerage platform or even their crypto platform, so they can invest into cryptocurrencies as well as stocks. They also have personal loans, student loans, auto loans, mortgages, refinancing, and a plethora of other things, all on a single app. SoFi, ticker symbol SOFI, currently trades for just $9.89, which is phenomenal. This is lower than the low-end analyst price prediction, which is $14 for the next 12 months, and it's always good to see that the current stock price is trading below the low-end analyst price target, because this gives us a fantastic margin and buffer of safety. The average analyst price target for this company is $17.95, while the high-end bullish price prediction for the company is $22. So yes, you could literally double your money if the most bullish analyst is correct about this particular company. Morningstar actually has a fair value price target for the company of $20 per share, and right now around 11 analysts currently cover the stock, with 8 of these analysts saying that SoFi stock is a good buying opportunity, while the other 3 analysts say to hold the stock, while none of these analysts say to sell the company or that the company is going to underperform the overall market. And although this is fantastic news from analysts, let's talk about their latest news developments, specifically what their CFO, which is their chief financial officer, said in their most recent earnings report about how the company is going to start rolling out options trading, which will give investors the right to buy and or sell stock at certain prices by certain dates. So I will explain options investing to you in this video. But right now I want to focus on the SOFI stock price, how it was consolidating, and why the stock is currently downtrending right now. So we saw a good amount of volatility and consolidation around $15 for this company until recently, where multiple macroeconomic factors really started to take effect against various growth stocks, including SoFi, Palantir, Neo, and a plethora of other growth stock companies, mainly due to macroeconomic factors that I've gone over in a multitude of other videos, but I will refresh your memory, such as geopolitical pressure because of the war between Russia and Ukraine. We have the potential of China invading Taiwan, and apart from that, we also have macroeconomic factors such as rising interest rates on top of investors taking their money out of the stock market and investing into the bond market, rising gas prices, and of course, investors liquidating growth stocks such as SoFi Technologies and investing into blue chip value stocks. So that's why we can see this really bad downtrend in the overall stock price, and you actually can see this trend in a multitude of other growth stocks. However, I personally use this as a fantastic buying opportunity, especially if you can find a SPAC trading below that $10 mark. So because SoFi Technologies is trading below $10, I personally think it's a good buying opportunity into the stock. But again, don't over allocate yourself too much to a single stock, because that would be bad risk management. I personally don't over allocate any more than 5% of my portfolio to a single company, regardless of how good I think that company is. But with that out of the way, let me explain options trading to you very briefly and simplistically. Basically, an options contract or options trading is you're speculating or betting on a stock whether or not that stock is going to go up and appreciate in price, or if it's going to fall and lower in price. If the stock appreciates and you think that the stock is going to trade higher, you would want to do a call option. You're calling that the stock is going to increase. However, if you think that the stock price is going to fall over a certain amount of time, which you pick, that is called a put option. And I remember this as putting your foot down. So put is down. So the article gives a fantastic example about this. However, they don't go into too much detail regarding regarding put options, they basically just use a call option, but the idea is the same, just in reverse. So the article says that if you identify a stock on the stock market that currently trades at $40 per share, and you think in the next month or even 2 months or even a year that the stock is going to grow, appreciate, and increase in price to $50 or more by that time frame, you would buy a call option because you're making a speculative bet that that particular stock is going to increase in price. Each options contract involves 100 shares. So if that stock exceeds that $50 bet, which is going to be known as the strike price, any dollar or cent above that $50 mark is going to give you fantastic profits, especially because this involves multiple shares. So in a very simplistic way, if I buy a call option and the current stock price is $40, I think in the next month that the stock is going to be $50, and I decide to enter that options contract, and that stock price actually reaches $51 before that allotted time, I will be in the money, so to speak, and I will be able to make profits off of that particular contract. And of course, put options would work except in the exact reverse way. If I think that the stock price is going to drop to $30 and it does drop below $30, I will then make a profit if I did a put option. And in essence, that's a very simplistic way of how to think about call options and put options. But if you are already an option investor, you know this very well. But what does this mean for SoFi Technologies? And how risky are options contracts? Well, honestly, it depends on how you use them. I don't use options very often unless I am very confident in a particular trade, and I will actually bring up a trade in which I predicted and then successfully used put options to make a phenomenal amount of money. And of course, this is recorded on my channel, so if you doubt this particular prediction, you can go and find that particular video, which I will talk about in a second. So the reason why this is good for SoFi Technologies and how it's going to benefit the SoFi stock price is that SoFi runs a brokerage platform which allows people and investors to buy and sell stock, and now it's going to allow these investors to be able to enter into options contracts. And like many other brokerages, SoFi runs a commission-free brokerage, which means that you don't have to pay SoFi to actually buy or sell stock like you used to back in the day. But companies like Robinhood have really popularized commission-free online brokerages. Now, I do want to say that this brokerage is not a market maker, and what I mean by this is that SoFi Technologies doesn't actually execute those trades. It actually goes through a clearing company called Apex, which is a giant clearing company that actually has contracts with multiple brokerages. So you could ask, how does SoFi make money by people buying and selling stocks or even using options on their platform? Well, they mainly make their money from payment for order flow because they are driving these order flows to Apex, and that's how they make money. However, the great news for SoFi is that options trading and options contracts actually are much more profitable than regular investors buying and selling stocks, so this is going to generate more revenues for SoFi Technologies. Now, to give you context, I actually used options for Robinhood stock because I shorted the absolute mess out of Robinhood, and as you can see from the stock price chart of the HOOD stock, it has been very profitable. I had a video predicting before Robinhood even IPO'd that the company would surge up in stock price, which is exactly what they did here, and then once it hits their top, they are going to absolute plummet in price. And this is a way that you can make loads of money, especially if you can successfully predict if a stock is going to either depreciate or go down in price, or appreciate and go up in price. And it just so happens that I was very correct for Robinhood stock, and I made a lot of money from it. And it's good, now investors can do this on SoFi's platform, which I am very excited about. It's going to generate SoFi Technologies more revenues because they are bettering their investment platform and their brokerage services through options trading. This is going to attract new investors and a new type of investor on this platform, which is just going to generate more revenues for SoFi Technologies. So now I want to go into a little bit of the financials of SoFi Technologies, and I've done this before, so we won't do a full revamp of everything. I really want to focus on their student loan revenues as well as their earnings before interest, tax, depreciation, and amortization. So if you didn't know, the student loan moratorium is still active active, and that's supposed to be active until May 1st of 2020. And what the student loan moratorium is doing is it's preventing interest from accruing on various student loans, and this has de-incentivized various students to refinance their student loans with financial institutions such as SoFi Technologies, which used to make the majority of their revenues actually from student loan refinancing. So this hurt SoFi Technologies a lot. However, they have more than recovered from this, and we can look forward to the student loan moratorium ending around May 1st of 2022, as long as it doesn't get extended again, and this is going to benefit SoFi amazingly. This means that SoFi Technologies could generate around $30 to $35 million of revenue and $20 to $25 million of contribution profit just in the first quarter. And if we multiply this by 4, because there are going to be 4 quarters, this is a lot of money. These are hundreds of millions of dollars of revenue that SoFi Technologies is going to be able to regain, which is going to be a fantastic catalyst. So that is something that investors should look forward to, because it could reflect very positively on the SoFi stock price. On top of that, management actually anticipates to generate between $280 to $285 million worth of adjusted net revenues in the first quarter of 2022, which would be an increase of over 30% year over year. And for the full year of 2022, their management actually expects that their adjusted net revenues are going to increase around 55% year over year to $1.57 billion, on top of bringing in EBITDA of $180 million, also known as earnings before interest, tax, depreciation, and amortization, and this is phenomenal news. Now, the downside is that SoFi Technologies does have stock-based compensation programs, but they only anticipate between $80 to $85 million of stock-based compensation to be going out in the first quarter of 2022, which would equate to around $340 million for the full year of 2022, which again is not that bad, especially if we can discount this using the increase in revenues if the student loan moratorium ends. So those things are not going to 100% offset each other, but they're definitely going to help with this particular expense, and it's overall very bullish news. Now, the bad news is that SoFi Technologies has fallen around 56% since one of their peaks in last June. However, because SoFi stocks are in free fall, I always use this as a fantastic buying opportunity in high conviction stocks that I have, which would include SoFi Technologies. And on top of this, Wall Street analysts remain very bullish and positive on SoFi Technologies because the overall fundamentals of the company and their forward growth projections are absolutely phenomenal. So let's see what analysts have to say about SoFi Technologies. Well, many analysts say that the current SoFi stock price is falling because the overall stock market is falling. It's nothing to do with SoFi's fundamentals or even how the company is performing. It's mainly because of the FUD in the overall market. Now, what did specifically cause SoFi Technologies stock to fall recently is their purchase of Technisys for around $1.1 billion in an all-stock transaction, and investors weren't happy about this, so many investors ended up liquidating their stocks. However, I think this is a fantastic long-term buy because this allows them to establish multiple back-end opportunities, because Technisys develops banking systems that help financial institutions with day-to-day operations, such as processing deposits and loans, in a very innovative cloud-based solution. The article goes on to say that SoFi doesn't have an extremely strong balance sheet, but also not a terrible balance sheet. They have around $500 million on their balance sheet of either cash or short-term cash equivalents. However, they do have total debt of around $3 billion, but what do you expect from a phenomenal growth company that is consistently investing into themselves even if they take on debt? This can actually be looked at as a good thing in some instances, depending on the current market environment, because if a company is confident enough to actually take on debt, they should be confident enough in their ability to pay off that debt in the near future. Also, their acquisition of Technisys is going to generate them between $500 to $800 million of revenues between now and 2025, while also reducing their expenses each year by around $80 million between 2023 and 2025. So not only are they gaining revenues, they are also using this to cut current expenses and costs, which to me is fantastic news. Specifically, analysts have been updating their ratings on SoFi Technologies, many of them lowering their overall price targets. Right now, according to Wall Street, the average stock price target for SoFi stock is around $18.70, which provides around 80% upside in the next year if we invest into SoFi Technologies right now and we have an average cost at around $9 to $10. An Oppenheimer analyst recently lowered their price target of SoFi Technologies from $28 down to $18 due to the volatility of the overall market as well as the current company. A Bank of America analyst initiated coverage on SoFi Technologies, and he has a stock price target of $17, while Credit Suisse forecasts to be around $16.50 for the next 12 months. And although these may seem like bearish price targets, honestly, these are all way above the current stock price of around $9 to $10, which should actually encourage investors to double down on this particular investment. But again, do this with wisdom. Don't over allocate more than 5% of your portfolio to a single stock, but that is just my personal opinion, and that's what I do, which lowers my overall risk of any losses. However, like I said in the beginning of the video, we do have very bullish analysts on the SOFI stock that think that the stock price could surge all the way up to $22 per share, while Morningstar gives this a price target of $20 per share, allowing investors to more than double their money. But I would love to hear your thoughts down below. Remember to go and smash that like button right now for more videos like this one. Subscribe if you are new, and I will see you in the next YT video.